right into it. What's up, guys? Welcome back to my channel. My name is Joannis or Joe Hatagwa. I'm a Sierra Leonean American living here in West Africa. I'm in a new location right now. I'm in my friend's condo in, what is this place called? This is called Cantonments, and we are in Embassy Gardens. So this is what Embassy Gardens looks like, at least her particular apartment. I'm gonna do an Airbnb tour of this place, so you guys are gonna get a chance to see this. But if you're watching the replay, or if you're watching live, period, there is going to be a link pinned here in the description if you're watching live, or in the notes here that you can go to watch the live. If you are watching the replay, just go to the profile and click on that link, and then you can watch the video there. So I'm going to be presenting today. I'm talking about Silicon Valley Bank, how it's going to affect African startups. So about 3 or 4 weeks ago, I did a video about how much money African tech companies got invested last year in 2022, excuse me. And that number was quite substantial. It was over $5 billion, much of that coming from US-based venture capital firms. And so many of them were affected by what happened at Silicon Valley Bank. And we are going to talk about what happened with Silicon Valley Bank and how that is affecting African startups. There was a mad bank run on Friday. There was a ton of worry about what was going to happen. There's been some updates since then. This happened on Friday. So we're going to go through all of that today. Any of you who are new and aren't too familiar with me, my name is Joannis or Joe Hatagwa. I'm a Sierra Leonean American. I do live here in Accra, Ghana. I do everything from interviews with diasporans that have moved to Ghana or Sierra Leone or Africa in general. I interview CEOs and to learn a little bit more about their companies and how they built these businesses. And I've also done tours of Airbnbs and condos. This condo in particular, I've actually done a tour of it. I'm editing it, and I will be sharing that with you guys. So you guys will get a chance to see what real estate looks like here, how people make decisions to move here, what life is like for them here, and how businesses are run here on the continent, at least in West Africa and everywhere I go. So that's really what the channel is all about. Today, again, we're going to talk about what happened with Silicon Valley Bank and how that is impacting African startups. Now, if you're watching this on Instagram and you're watching this as a replay, what you're going to want to do is you're going to want to go to the profile and click on a link there so you can watch the live video with all of the presentation and the questions on screen. And if you are watching live, just click on the pin link there, the pin linked in the comments there, and then you can join live. So I want to give everybody a second to join. Let me know if you guys can hear me. So let's see. Menelik is here. Good evening. What's up? MissElaine121 said, good evening. Glad to be here. Glad you're here. Esther Oppong says, I'm here. What's up, Esther? Menelik says, can hear you loud and clear. Good, good. Esther Oppong said, Trump said this was going to happen if Joe Biden gets in the office, and here it is. I think, Esther, you might be missing a little bit because this is only Silicon Valley Bank. This would have happened regardless of who was president, just to be clear. In the bank run, and we could talk about this. In general, things like this, when it comes to banking crises, technically recessions and banking crises, the more recent ones have actually happened under Republican rule, if you're actually looking at how these things tend to happen. But it's not really about who's actually president. Technically, this is really a little bit more about decisions that were made by a particular bank and how it's going to impact Africa. But we'll talk about that. MissElaine is, and still so many. Okay, so MissElaine is also talking about still so many voted for Biden. It sounds like you two are really big Trump fans, which is interesting. This is not going to be about Trump and Biden. We're not doing that today because we got plenty to talk about if we want to do that. Esther Oppong says, what's up, bro? What's up, Esther? MissElaine says, yes, please explain. I'm lost. I will definitely explain. And Haji Bah says, hey, Joe, what's up, Haji Bah? Okay, so we're gonna talk about this. So I got a frantic call at I don't know, probably 10 p.m. or 11 p.m. Friday evening from my younger sister asking me what is going on with the US government taking over control of a bank in California. That's all she kind of knew. And so I started looking into it because I honestly did not see the Axios alert in my inbox until Saturday morning. I didn't see it that day. And so I went in I went in and really did a deep dive into what is actually happening. And you got to keep in mind, this is one bank that made some mistakes like many banks do. And that has a lot to do with our lax regulation on banks in terms of American government and American policies, which generally actually lean more in favor of banks due to a lot of what's happened in the world of right-leaning politicians and how they deal with regulation and banks. So I don't want to make this a political statement. I see a couple people talking about, this speech that was done by Trump, or, this is what he said. There's no way you can predict what's going to happen to one bank, and it was one bank, but this one bank does have a ripple effect across Silicon Valley, and I can tell you why. And I think actually the people who predicted this more accurately are people who are in the crypto space, people who deal with cryptocurrency, because those people will always tell you, don't keep all your money in banks. You should have money in other areas. And so that is something that I think we should probably be more looking at. And that's really where we're going to go with this conversation today. So DR is here. What's up, DR? Esther Oppong said, I pray this doesn't affect other banks. It doesn't look like it's affecting too many other banks, but there are some second level and third level effects. So we are live on Twitch, Instagram, Twitter, Facebook, YouTube, and LinkedIn. So I want to thank you all from joining across all the different platforms. Again, if you're joining from Instagram, whether you're watching live or watching the replay, if you want to see what's going on, if you're watching live, you can click the pinned comments and then just click on the link there, or copy and paste it and jump over to the live. And if you're watching the replay, you just want to go to the profile and watch. So without further ado, let's get right into today's topic now that we have enough people here. Okay, so we have a lot to cover, and I want to make sure I give everybody a chance to ask their questions and make their comments known. So again, this happened last Friday. So the information I have, this is Monday, March 13th. This happened Friday, March 10th, if I'm looking at the days correctly. And so there's still a lot of unknowns, but here's what we know so far. And from the research I've had and the articles I've been reading up until about 25 minutes ago, here's where we are today. So let's jump right into it. Before I do get into it, Haji Bah says, this is a difficult time for the tech industry. My fear, the impact it will have on Africa tech sector. We'll talk about that today. DR says, fractional lending practices will always expose banks to potential liquidity crises. We always have really smart folks in our that are subscribed to the channel and that comment. So I, to a degree, know what that means. But we'll talk about what I've learned, and you guys can jump in and add your color as we go through this. So let me go ahead and share my screen. And again, if you're watching on Instagram Live, you could just, if you're watching live currently, like as we are going live, you could just click on the pinned link in the comment there. If you are watching the replay, you just want to go to my profile and click on the link there. That'll take you to the YouTube channel. And then from there, you can just watch the video as it goes along, and you can see the presentation on screen, because I am now presenting my screen for those of you who want to follow along. And as Menelik said, like, tag, share, comment. Let's make sure people get this information, because there's a lot that is unknown, and people have a lot of questions, and we want to just make sure we help them answer those questions. So Ben Berliner, Ben I used to work with many moons ago at OpenX. He said this didn't happen because of Joe Biden. It happened because of Trump's deregulation. I would say yes to some degree. I think this, I mean, we could really go back and really blame both sides of the aisle if we're being honest. You know, the deregulation did start in the 90s, right? Under the Clinton administration, a lot of the deregulation of banks started there. Then under Bush, further deregulation happened. Then you had the financial crisis, right? And so you have kind of two administrations on either side of the aisle to blame for the financial crisis. However, under the Obama administration, they did try to put certain things in the place, but at the end of the day, Republicans and Democrats both do have a lot to gain from ensuring that banks get to operate in the way that they like to operate, because they do fund different campaigns. And so we don't want to just blame one side of the aisle or the other. I think both are to blame, and it really is just capitalism. American capitalism and the way they work is really how is who you can blame for this, and then you can kind of pick and choose who has more faults than others. But just to speak to that, it was further deregulated, and some of those things were overturned in the term following the Obama administration. And so you do have this issue of deregulation or loose regulation on these folks. All right. So I just wanted to get to that comment. Okay. So again, Authentic African, this is the channel. This is the page. I will be doing longer form videos 3 times a week. We go live every Monday, 9 p.m. GMT. I am aware that up until this past weekend, as far as I understand, the time on Eastern Standard Time or in the United States changed. But as far as I know, I think at the end of this year, I think this is the last time we're doing fall back, spring forward. I think this is the last year that's happening. So at some point, we'll all be on the same time zone all year round. But as of right now, I only go live 9 p.m. GMT, which is specific to West African GMT because London does change time zones sometimes too in the UK. So just go by West African GMT, whatever time it is in Ghana at 9 p.m. on Mondays, that's when I go live, no matter where I am around the world. All right. I also do 2 other videos per week. It'll be vlogs, there'll be interviews, all kinds of other videos that I'll be putting out each week. And I do want you guys to check out the interviews I did with the shop owners in London, the Sierra Leonean shop owners in London. So I did 2 over the last 2 weeks, and then I have another one coming out this weekend as well. So I want to highlight business owners, not only on the continent, but those who are leaving the continent and starting businesses in the West. I'm also highlighting their businesses as well, so you can patronize those businesses if you live in the area. So those of you who are in London or plan to visit London, check out my channel and you can see some of those posts about them. All right. Let's get into today's content. I'm going to skip over everything about the channel. Just make sure you like, comment, subscribe, comment, and share it with your friends. Turn on post notifications as well. Okay. So the Silicon Valley Bank collapse and its impact on tech startups. So we're going to start with the evaluation. What is happening and why is everyone panicking, right? Let's just start like high level so everybody gets a full understanding what the situation is. And again, if you have any additional comments or color, feel free to add it to the comment section, and then I'll put it on screen and I'll share what you're saying. So the U.S. government took control of Silicon Valley Bank last week. So U.S. banking regulators on Friday assumed control of Silicon Valley Bank. This is the country's 16th largest bank and a top financial institution for technology and life science companies. Now, why does that matter? It's the 16th largest bank, and it is a bank that is not like the banks that we all are used to banking with, right? I mean, you got Wells Fargo, you have Chase, you have all these other banks that you're used to that have multiple branches in every city, you know, or you could get to one within 2 hours, right? If you're in the middle of nowhere in Vermont, like I was, I had to drive into New York to get to a Chase bank, but there was no Silicon Valley Bank branch nearby. So even though it's not one of these giant banks that you're used to, all the commercial use that, or not commercial use, but personal use that most people are used to, it is still the 16th largest bank in Yeah, it's the 16th largest bank. So why is it so large? And it is, by the way, the big picture is this is the largest bank failure since Washington Mutual. And I mentioned Washington Mutual. I was a Washington Mutual Bank customer, and it now is Chase Bank. So all of those Washington Mutual locations are now Chase. And so Chase Bank took over Washington Mutual during the financial crisis, and a similar thing had to happen with SVP. So Federal Deposit Insurance Corporation, or FDIC, which you probably heard at the end of all these different ads you hear on podcasts and on commercials about investing. They created a new bank, which all of Silicon Valley Bank's deposits were transferred. And it said that all insured depositors will have full access to their insured deposits no later than Monday morning. They also made some additional changes as of Monday, but this was what was as of last Friday. One of the big caveats for the deposits was it was only going to insure up to $250,000. That was the initial discussion. And the physical bank branches were going to reopen on Monday, but now assumed under this new identity, under the FDIC's new branch or new bank. So if you look at the numbers, which is crazy, they had approximately 209 billion total assets and 175 billion in deposits at the end of year last year. So the current deposits total is undetermined because a lot of people took their money out, but also we don't know how much that is since December of last year. So if you quantified how much money walked out the door last week, it was $2.25 billion because they're publicly traded and their stock just dropped and plummeted. So there are other second order effects that people are talking about. Other banks could potentially be affected. It doesn't look like there were too many other banks affected. And obviously the market price for Silicon Valley Bank dropped tremendously. So those are the basics, right? We can get into how this happened and what are the other second order effects, but that's what everybody was reading about, right? If you follow the Shade Room, right, you saw a post on the Shade Room that said the US government takes over Silicon Valley Bank. And so then you had all of these conspiracy theorists saying, you know, the government's taking over all the money and et cetera, et cetera, et cetera. Then you have people, of course, who are on different sides of the political aisle, making their own assumptions as to why this happened and then blaming the other folks. And so that's what you found. That's what you found with the different groups and constituencies online, right? Everybody has a conspiracy theory, but this is what we know to be true specifically. So I want to do a quick review of the investments that happened in Africa last year in terms of tech. As a reminder, we talked about this, you know, about 5 weeks ago. I did a live where I went through Africa and how as a continent it performed relative to other and tech investments bank with Silicon Valley Bank. So that is a fear of many folks is what is going to happen. So let's just talk through the numbers here. So if you guys remember, year over year, the only increase in funding anywhere in the world in terms of continents, and they of course they break out the United States here, and they also break out Latin America here. The only increase in funding year over year was to Africa, 127% increase in year over year funding from 2021 to 2022. Now, a share of the total amount is obviously much smaller. You see the USA by far leads all tech investments. So more US companies are actually impacted by this than companies on the continent of Africa. Obviously more companies based in other places as well. But it's all contingent on where the funding was coming from. You know, a lot of Asia and Europe has a lot of funding coming from the Middle East as well, but many of them do have funding coming from the US. So again, here's what the numbers look like. 415 billion plus in global funding is actually down by 200, almost 200, actually more than 200 billion. In terms of the US venture funding, that was down over 100 billion. And then in Africa, of course, it grew from just around 5 billion to a little over 5 billion in funding. Phoenix Mars, what's up? Thanks for joining. And so if you want to see how it broke out by sector, right, or by section or country, I guess, on the continent of Africa. So the top 5 markets were as follows. Ghana did 152 million. Nigeria did a little over 1 billion, right, in deals, 24 deals in Ghana, 722 million and 114 deals in Egypt. Kenya did 652 million, 77 deals, and South Africa had 64 deals, 420 million. So quite a substantial amount of funding went to the continent of Africa. And these are this is kind of like the tier 1 group of countries. There also is a tier 2 group as well that also raised between 90 and just under 151 million. About 6 countries as well. I don't have them off the top of my head, but they also raised a significant amount of funding. So all in all, on the continent of Africa, you had a little over $5.4 billion in disclosed and undisclosed funding across the continent of Africa. Let me just pause it there if there's any questions or any comments. Esther Oppong says, Lord save us. Yeah, so there's a lot here. There's a lot here to unpack, and we'll talk about it all. But yeah, so I'm gonna get into, so let's further the discussion about what exactly happened. So, you know, everybody's talking about Silicon Valley Bank over the weekend. You saw, you know, all the news stations around the world, all of the news sites around the world were talking about it. And so here is what happened. Here is who Silicon Valley Bank is. So first of all, they're founded in 1983. They're California-based Silicon Valley, and they're focusing on serving Silicon Valley startups and venture capital firms, meaning companies that offer funding to ventures and businesses around the world. It not only provides services to venture capital, private equity firms, in addition to offering private banking services for high net worth individuals. So this also impacts the angel investing community, because many high net worth individuals invest their own personal funds into companies, right, in the angel round. Before they raise these big rounds, sometimes you can be a part of a smaller round of 25,000 or 50,000. High net worth individuals are also have their personal money in Silicon Valley Bank. So you can see how this could have a domino effect on so many different businesses who expect to make money or to raise money from these businesses. So how big is Silicon Valley Bank? Nearly half of the U.S. venture-backed startups and 44% of the venture-backed tech healthcare firms that went public last year have business with Silicon Valley Bank. As of December 31st, as I mentioned before, they had $212 billion in assets. And some of their clients include Shopify and Pinterest. So obviously, if you're familiar with Shopify, I might have mentioned this to you before. I'm relaunching my e-commerce store. It was supposed to be February. Now it's going to be March because of challenges here in Africa. Shopify is the site that I use for my e-commerce site. Pinterest, of course, is a site that many people are familiar with. Is a social media platform. Here's something. DR says, in future, these funds should have moved to African banks that are more stable. And this is speaking to, I'm sure you mean like the funds that are here in Africa. And, you know, it's a toss-up to say whether or not the banks in Africa are more stable, right? Now, ideally, right, what you have with banks is, I don't know if most people are aware of this, but when you deposit money in the bank, they don't always just hold the money in that bank, right? A lot of times they take that bank and they invest it in other things. That is how they tell you, if you have a savings account, you have this much interest, right? So that's just for the general consumer. Then there are other people who actually take large sums of money and invest it with a bank with the expected return on their investment when they invest in these banks. And so these banks have the fiduciary responsibility to you as an individual personal account holder and institutional investors to get them a return on that money when they put the money into these banks. So that's why they invest in different things. So we'll talk about what that means, but that is where you saw some issues because the stuff that they invested in lost their value. Okay. Africa banks are stable, he said. Yeah, I think it depends on who you're talking to. There are different people who have different belief systems. DR says, it seems like faux accounting when the funds are stated as being in Nigeria or Kenya, yet less than 10% is onshore. Yeah, I mean, look, I think a lot of times when you're dealing with countries that could potentially have political instability, right, where you have, you know, a large percentage of the population, and I know this is also the technically what a lot of people believe in the United States as well, but a large percent of the population who does not agree that the election results are as expected. That leads to volatility. Volatility leads to things like bank runs, which we'll talk about. And I think people get a little nervous about keeping all their money in one particular country, especially countries on the continent of Africa. And we'll talk a little bit about that in a second. DR says we have Stanbic, Standard Chartered, UBA, GT Bank, Access Bank, etc. Very, very solid. Yeah, it depends on who you talk to. You know, these banks do all have their challenges, though. The bank apps go down from time to time. Sometimes you can't get your money out for specific reasons. Certain transactions you try to do don't work from time to time. So there are certain challenges from time to time with some of these banks. So you can understand why they diversify their interest. I think the challenge is when you put all of your funding into one bank, or you get all of your funding from companies that have all of their funding in one bank. Esther Oppong says, love the fact that you read all comments, of course. USD accounts are completely insulated from local currencies. That is true. I would recommend if you're here on the continent of Africa, you should definitely have a USD bank account for sure, 100%. All right. So we talked about how big Silicon Valley Bank is. Let's go through the timeline of what happened. So you can read what's on the left, you can read what's on the right. But basically on the right, this is what explains it. So there was a funding boom in 2021 because of 2020, the global sickness. As you guys all know, that's how I describe it because of YouTube and the platforms, deflatforming people and suppressing content when you speak about that topic. So the global sickness that happened, there was a lot that went on in 2020. One, you had stimulus checks coming, but you also had a bunch of people investing in a lot of different businesses because they had extra cash, right? And so that led to a funding boom in 2021, which amassed large deposits. So a bunch of people were putting more money in their banks, and people were investing more money. Just to give you an idea, in 2021, it was 189 billion, and it got up to 198 billion within that same year. So Silicon Valley Bank later invested heavily on bonds, which were $1.3 billion of securities. So these are government bonds. I didn't do the definition of a bond. You can look it up if you so choose. But interest rates at that time were very low. So you buy these bonds at low interest rates, and then you expect a return on those investments over time. And then so when people try to take their money out, there's money to give. But you have to realize that, right? No bank is storing millions and millions and millions of dollars in those banks for many security reasons, of course, as you guys know. And that's why when you want to take out more than $10,000 at a time from your bank, you do have to let them know in advance, right? These are all things that you may or may not know, but these are things that have to happen, right? Okay. So in 2022, the Federal Reserve, this is technically where a lot of banks house their money, started raising interest rates, which drove down the value of the bond holdings issued at lower rates. So they were issued at lower rates and they had a higher value. To combat inflation, the Federal Reserve increased interest rates, which lowered the value of these bonds. So if I buy this phone for $100, right? And something happens where the value of this phone is $80, but you gave me $100 and are expecting to get your $100 back. Well, now I only have $80 worth of something. So if I sell this, I only get $80 back, but I still owe you $20. And so this is what happened with Silicon Valley Bank. Let me know if you guys are following. I'm trying to use an example that might help people understand. Are you guys all following so far? Does that make sense? I'll wait for any questions, but I'll keep reading the rest of this, and then I'll answer questions before I move on in case any questions come in. I know they're a bit delayed. As funding depleted, deposits made by startups and institutions such as SVP also started declining. So they stopped depositing as much money, forcing the bank to sell more securities at a loss to cover up the fact that they had less deposits coming into the bank. On Wednesday of last week, SVP announced that it had sold $21 billion worth of bond assets at a loss of $1.8 billion. Now, basically, they just said, I sold this phone and I lost money. So you have to imagine everybody who's been investing in me is like, wait a second, I've been investing money in you and you have not been returning anything. I'm going to stop investing. And so people started to sell their shares of Silicon Valley Bank. And also people started going to the bank to start to withdraw some of their money to try to move to other bank accounts. So, of course, that had a huge impact on the stock market price, right? It just dropped dramatically. It also said they were going to be raising $2.25 billion via a share sale. So they were going to sell some more shares, and that's how much they were going to raise. So does that make sense so far to everyone? Is that clear? I saw some thumbs up. I see some people saying, okay, this is very good information, good explanation. So this is what has led to what happened on Friday. Now, let me just see if there's anything I'm missing here on the left. So it says the reasons for it here. The long-term bond investments, problematic when interest rates surged, additionally to the bank's balance sheet management errors. So they also had some errors in their balance sheet management. Obviously rapidly rising interest rates. So we've covered all of that. So DR says the age-old tussle between being solvent versus being liquid. Cash remains key. So what DR is speaking to here is ideally you have cash over the value of your assets, right? And because of situations like this, ideally you don't want to just have value of assets because the assets can depreciate, and when you sell it, you won't get as much cash back, right? So ideally you have the cash, especially in US dollars as of right now, because it tends to be more stable than other currencies around the world. For whatever reason we can talk about later, but that tends to be the case. So that was the issue with Silicon Valley Bank, right? They didn't actually have cash. They had assets that was supposed to be worth more than the cash that the deposits had been given to them. Unfortunately, their assets ended up being worth less than the cash that they had been given in deposits, and that's what led to the issue here. Lenora says, Joe, you're a great educator. Thank you, Lenora. I appreciate it. And you guys have to know, I did all my research on all of this weekend. This is how I spent my weekend, guys. So let's get to the next slide. So what's the impact, right? So there was a bank run on Thursday and Friday. So a bunch of experts, online experts, whatever you want to call them, people who talk about this kind of stuff, especially crypto folks, because crypto people and people who deal with blockchain, when a banking crisis like this happens, right? Those guys use it as an opportunity to pitch their services. I just watched an expert go on the news and talk about the impact on Africa. And it was a 5-minute segment. 3.5 minutes of his segment was talking about, this is why you don't have cash in banks. This is why you should have cryptocurrency, right? So of course, people are going to use this to talk about these things. And they're going to be folks who are selling services, right? Who are going to be focusing on how to get you to use their services versus the services you have been previously using. So let me quickly walk through what a bank run is. So what you see here on the left is a polite bank run. You know, a banker is speaking to some folks who are like, we want to go get our money out. And he's saying, well, we're closed. Sorry, we're not going to be open again until Monday. So you can imagine how this might have been different, let's say, in West Africa, some other countries that you know who had similar type bank runs a few weeks ago, pre-election. You might remember how that played out. But this was in Silicon Valley, mostly high net worth individuals. The people you see here are all worth multiple six figures, whether they themselves have money in this bank or their businesses have money in the bank. So that's who you're seeing depicted in this picture to the left at an actual Silicon Valley bank branch. So what is a bank run? It's basically, it occurs when many clients withdraw their money from a bank because they believe the bank might fail or in the near future. So in other words, it's when a fractional reserve banking system, which is basically where banks normally only keep a small portion of their assets in cash, which is what was described by DR earlier, right? The idea of having a fractional banking system. So Silicon Valley Bank kept a small percentage of the money that they're supposed to keep in cash, and the large majority of it is in investments. Now, in hindsight, that sounds idiotic, right? But you have to imagine the mindset of people in Silicon Valley, right? This is where majority of the tech startups are headquartered, right? And even if you're not headquartered there, you put an office there, because this is where all of the venture capital, private equity, and all the people who focus on investing in tech, AI, and all these other different things around the world, they're mostly centered there. And the people who fund these businesses are also centered there. So banks that these different groups would be using would also follow the same models that they follow, right? The startups there are raising money from venture capital firms, private equity firms, etc. The private equity firms and venture capital firms are housing their money in a bank. And of course, they'd house their money in a bank where they know the bank is going to give them a return on their investment, as well as the investments they make in the startups, they're expecting a return on their investment. So of course, the bank would take that same approach, right? Okay, so numerous customers withdraw cash from deposit accounts with a financial institution at the same time because they believe the financial institution is or might become insolvent, which is actually technically what was happening to Silicon Valley Bank. As a bank run progresses, it may become a self-fulfilling prophecy. As more people withdraw cash, the likelihood of a default increases. That's why they close their doors at Silicon Valley Bank, and we're trying not to let people make any withdrawals, right? But many people were making a ton of withdrawals over the weekend and moving their money to different banks. And it just kind of is like a domino effect, contributing to further withdrawals. So this can destabilize the bank to the point where it runs out of cash and thus faces a sudden bankruptcy measures. So is all that clear? And this picture on the right we'll talk about this picture and then I'll get to the comments. So what is a bank run? So there's obviously you have the banks, which is on the far left of this image that's on the right. And then you have kind of two ways it can go. You have high chances of bankruptcy or deteriorating market position. So both things are what people were saying. It had a high chance of bankruptcy because of their issues with not having cash. And then they also had a deteriorating market position because of those issues that people were announcing. So both of those led to customers making withdrawals of their deposits, which is a bank run, which leads to cash shortage and bank insolvency, which is why it was taken over. So here is, now before I move into the next slide, let me see if there's any questions or comments or thoughts before we move on. And again, if you're joining on Instagram Live, you can click on the pin link in the description to see what I am presenting on screen. And so you can see the comments as they're written by the different folks that are following on the YouTube Live or any of the other lives. Okay, cool. So there's a ton of people joining on Instagram. So I just want to make sure I'm acknowledging them and answering any questions that come from them. There are a ton here. Is interest rates expected to raise higher or lower? That's a great question from Freeway. And that's all dependent on a woman named Janet Yellen, who is you guys have to tell me what her role is, but she's the person who you're going to look for. So just Google her. She'll tell you. She's the one who basically makes the announcements, right? Maybe it comes from the White House. Maybe it comes from her, but you're looking for that person. Janet Yellen's your person. So just look her up and just follow her. Maybe she's on Twitter. Any news that pertains to her, but any financial magazine or financial institution will mention what they're expecting. Okay. Pro Woman J says, when you get a chance, repeat the impact on African startups. I actually will. Actually, we're gonna get into that in a little bit more. I did a high level earlier for those who were joining earlier. I'll do a deeper dive in a moment here. And is this Nadege? Is that how you pronounce it? I'm sorry if I'm pronouncing your name wrong. You said great job. Thank you. I appreciate it. All right. So I just wanted to give you guys some background as to what's happening and what's a bank run, because you're going to hear these terms and you're going to hear people from all over the political aisle and people who are in all different kinds of businesses start giving their insight and input. And so it's just good to have a little bit of a background first, and then we'll talk about the African startups. Okay. So here's a question. DR says, do you think the VCs caused this run by instructing their startups to withdraw their funds? Each VC should represent about 5 to 50 companies on anywhere from 1 to 200 million USD per startup. So I and Nadege agree on this. The answer is yes, 100%. That's what caused the bank run. So you have to imagine, right? I'm a company that invests in other companies, a venture capital firm. For those of you who are not familiar, DR, I know you're familiar with this, but just for other people who are trying to understand what this question means. I invest in other companies, right? Let's say I have 10 companies that I've invested in. I myself have my money in this one bank. I told you guys, because I like this bank, all 10 companies to put your money in this bank. So then I find out that they made an announcement that the money in the bank and the money in the assets that they have does not equal the amount of money that we all think we're supposed to have in the bank accounts. I'm going to take my money out of that bank and put it somewhere else. And I'm going to tell all my startups to take their money out of that bank and put it somewhere else. And that's exactly what happened. Between Wednesday and Friday of last week, that was exactly what was happening. People were moving their money. And it was quite aggressive, to say the least. So really quickly, two people are saying things that I need to acknowledge really quickly. So Nadege, or I'm sorry if I'm Nadege, if I'm pronouncing your name wrong, you emailed me regarding visiting Sierra Leone. You got no response. I will get back to you. Just give me this week or whatever. I'll get back to you. Just keep in mind, guys, if you guys email me, you have to know that I have thousands of emails and thousands of messages in my inbox, and my DMs as well. So I do my absolute best to try to get to all my messages. But as this platform grows, it's going to become more and more difficult for individuals to be able to message me directly about specific questions. So what I want to do is continue to do these lives. So if you have a question or if there's something you want to talk to me about directly, join the lives and ask the questions here. It's more likely to be answered in real time, and I can help out as much as I can. But just know that as time goes on, it's going to be less likely that I'll be able to respond to every email or I'll respond to every DM. What's likely going to happen is if you have business opportunity, investments, I think those things get prioritized, right? So I've gotten a ton of messages about people who want to do business, people who have been asking about investments and things like that. Those tend to get prioritized because those have a direct impact on all the platforms that I have going on and the things that I'm doing, so I can provide more value to you all. Most people who have just general questions or thoughts or ideas about what's happening in Sierra Leone, things like that, those are going to be deprioritized in the inbox, but can be easily brought up here. So I do just want to mention that to you all, just so you don't feel like I'm ignoring you. I'm just doing my best to get to all the comments. I know I spent a little bit of time on that, but I just want to make sure you guys are aware of that. There's a question from Okimute. African banks should save these cash going forward for African startups. Yeah, I mean, that's one of the things that we should talk about, right? Is African startups should diversify their interests. But I think, honestly, you should do it in multiple countries if you can, right? So multiple countries, multiple banks, because that's the best way that you can minimize damage when one bank goes under. You know, don't keep all your eggs in one basket. DR says most African central banks do not permit fractional lending. So that's actually good, because then that means that they have more cash on hand. In the US, a bank can keep only 10% of your deposit and can lend out 90%. And as DR says, that's a disaster waiting to happen always, which obviously was a disaster for Silicon Valley Bank. So you are right. Nadege says, can you offer a consultation for those who need help? I will be offering consultation for those who need help. And that's a good point. I don't want to get too far off track, but for those of you who are planning to either visit or move to Sierra Leone, or visit or move to Ghana, I am putting together consultative services for both. Everything from driver's license to residency permits, to buying land, to getting stuff out of customs, to airport concierge services, which hotels to stay in, rental car companies, all of that in both countries, by the way. So I'm building up the resources for that based on my own personal experience and all the people that I know who visited. And I will be doing an announcement on that soon. So stay tuned. All right, so back to the topic at hand. So again, we talked about what a bank run is. Now you guys know. So I think this is interesting, right? Because this goes into what was FDIC insured deposits versus what were uninsured deposits. So we talked about the fact that they don't have to keep more than 10% of the cash in their bank, so that when you go to get your money out, only 10% might actually be there, right? That's one issue. The other issue is what is actually insured, meaning if the bank goes under, how do you ensure that your insurance gets your money back, right? So here's what's interesting. FDIC insured deposits was a fraction of the amount from 2018. FDIC initially said that they were only going to focus on $250,000. And I say only, but I mean, these folks have higher net worths and have much more cash. So they were only going to focus on $250,000 worth of cash for these startups and these individuals. So, you know, this right here is speaking to one of the other issues, which is your money's not insured when you go to a bank like Silicon Valley Bank. And that doesn't ensure that you're going to get your money back. Now, it looks like they are going to get their money back. That's something we'll talk about. But at least this just gives you an idea of the difference, right? So $200+ billion at the end of 2022, early 2023. And of that, less than, let's say, 15 billion was insured, right? That is a huge disproportionate amount of insured to uninsured, right? So this just gives you a visual representation of the situation. Okay, so we'll get into what the Silicon Valley Bank did, what happened with Silicon Valley Bank and the FDIC in a second. I just want to make sure I'm answering any questions. So MissElaine121 says, nice, we'll definitely purchase your service. Thank you. When I do consultative services, and I'll make sure you guys are aware of what happens or when that happens and what those services are. I'm actually in talks with a business partner right now. Mr. Jaga for Life says, hello, what's up? For those of you who are just joining on Instagram, we are talking about how Silicon Valley Bank's collapse will impact African startups, African tech startups in particular. If you're following on Instagram Live, you can click the pin link and join the YouTube Live so you can see what's being presented on the screen. And if you're watching the playback on Instagram, you can go to my the profile link in my the link in my profile and go over to YouTube and watch the replay there as well. All right, cool. So what happened on Friday? It says what will happen next because I started working on this on Friday. But the California Department of Financial Protection and Innovation closed SVP, as reported by the U.S. Federal Deposit Insurance Corporation, the FDIC. In order to secure the insured depositors, the FDIC established a new bank, which immediately upon closure. So all those insured deposits, so those lower billions, were all transferred. They did say they will sell off all of its assets, and they will, and then the new bank will continue its regular business operations. The insured depositors will receive their insured deposits, while uninsured depositors will receive dividends from the sale of those assets. Jerry Campbell has a comment, and Jerry Campbell says, sadly, SVP is reflective of a systemic problem within the banking industry as a whole. 2 banks in 1 week, and there's rumbling about First Republic Bank now. Yeah, they're talking about First Republic Bank and obviously Silicon Valley Bank and other places. Silicon Valley Bank in the UK actually was bailed out by HSBC, which is another bank in the UK, and took over Silicon Valley Bank in the UK, their UK division. I actually know somebody who works at Silicon Valley Bank. I'm hoping that she'd be willing to do a live with us at a later date to talk about these things. So fingers crossed she'll be willing to do it. I'm not sure because she just took on this job last year. It was a big deal. There was a lot of news about it. And I think she's trying to figure out exactly what happens and when the dust settles. But I'd love to have her on to talk about this because this is a topic that is far more complicated than I can fully express. Okay. So the U.S. obviously protected Silicon Valley Bank. Basically, it was the last time something like this has happened since the early days of the pandemic, or since the 2008 global financial crisis, right? So this doesn't happen often. There has to be widespread implications on businesses and a number of different things for something like this to happen. So this obviously was a big deal. If it was unchecked, it could have actually led to more bank failures, which we've heard. There's a few other smaller banks that they've said have potentially gone under, and there are a few others that could potentially be seeing the issues here. But it seems like it's largely been stabilized as of Monday today, from what I've seen. All right, so now to the question, in a deeper dive, how does this impact Africa and African tech startups, right? How do we get into specifics? So, Silicon Valley Bank triggered a panic among African startups on the continent. 30% of Y Combinator startups are with Silicon Valley Bank, and they're unlikely to make payroll. And so they said they're in deep trouble. Now that's if the money wasn't available today, they weren't going to be able to make payroll for this coming payroll. Now that may have been reversed as of today, but that was obviously some widespread panic over the weekend. So there was a bank run, obviously, that led to the demise. And it was tough on Friday to figure out how this was impacting African startups. But I do have some anecdotal insight as to how this was affecting some of them. So this guy, Benjamin, he said, check on your fellow tech friends. He actually heads up a Tanzania-based fintech. They also operate in Kenya, Uganda, Ghana, and Rwanda. It's called Nala Fintech. We had most of our money in Silicon Valley Bank, moved it all to another bank literally an hour later, and literally an hour later couldn't log back into SVP. And that's what he said on Twitter. And that was on Saturday at 10:21 a.m. I think that was GMT. So this was like early in the morning, your time, if you guys are watching in the States. So here's some other African tech founders speaking to what happened. So Chipper Cash is founded by a Ugandan and a Ghanaian had about $1 million in Silicon Valley Bank. And they had mentioned previously that Silicon Valley Bank has been the most important banking partner to the entire Silicon Valley ecosystem, which is what he said on Sunday. A little known fact is that 5 years ago, when I was trying to open Chipper's first bank account, SVP was the only bank that would accept us. I know there are countless other startups all doing very important work who would say the same thing. Therefore, it is quite sad to see such a pillar of our ecosystem brought to its knees. And I did see another article that said this: Silicon Valley Bank has been supporting entrepreneurs for 30 years. Actually, for 40 years. And these entrepreneurs didn't support Silicon Valley Bank for 48 hours. That's an interesting way of putting it. I didn't put that article up here, but I remember reading that article and thinking to myself, that's one way to see it. But the reason why people have continued to have support in them was because there wasn't a situation like this. And they have to understand, of course, this can have an impact. So now Chipper Cash did say they had insignificant exposure because they moved it to other banks around the world. And so they did mention that it was SVP was a great supporter, and that they had another full statement. But basically, Chipper Cash was able to survive because they were able to move all their money. So this is Y Combinator. So Y Combinator is an incubator. In an incubator, like you think about a premature baby, right, that needs full attention to help it grow, to become a baby that is viable to breathe on its own and to be able to go home with its parents, right? You think of that kind of an incubator. Think about a company incubator, one that takes very small startups, right, and helps them grow to be able to work on their own and scale. Now, the numbers vary depending on where you check. Y Combinator's own website says 86 startups, but I think there's some startups that are kind of co-founded by different people in different places. So basically 95 startups, from what I've seen from other writings from Y Combinator, have been either through the Y Combinator program from Africa or have been invested into by Y Combinator. 95 African startups. Again, Y Combinator, the majority of their money was in Silicon Valley Bank. Okay, over $1.3 billion raised by Y Combinator backed African startups from 2009 to 2022. So as I mentioned, 15 different countries, 95 startups participated in Y Combinator's acceleration program since the first African startup they had accepted in winter of 2009 cohort. 59 of them are in Nigeria. And a larger percentage of YC-backed African startups were accepted into the accelerated program in the first 2 years of their establishment. So they do take chances on really small companies. So they do say 30% of Y Combinator startups with SVP exposure will probably be unlikely to make payroll. That was what they were saying on Friday. So that's the direct impact, right? 95 startups just at Y Combinator. Now, this doesn't speak to the other venture capital firms who invested on the continent of Africa, which is much harder for me to find, and how much money they have at Silicon Valley Bank. That information is probably going to come out in the coming weeks, but Y Combinator was the one who had the most exposure here. So this just gives you kind of a visual representation of like the spread, it was spread throughout the continent, Y Combinator's investments, right? So you see, like I said, all the different countries and all the different companies within those countries, right? In Ghana, you had 3 major ones with Swipe, Tress, and OMG Digital. You know, and then of course with Nigeria, it's quite a few, right? And so this just gives you an idea of what some of the companies that might be impacted. So some of you guys have already given your ideas and your thoughts about what should be done. The question is always posed as to, okay, when this happens, what should African startups do to avoid this issue for the future? So one, diversified funding strategy, right? Multiple sources of capital. meaning don't just take money from venture capital. Work on getting grants, which are free money, basically. You don't have to pay it back. Angel investors in the early stages. Obviously, angel investors who have their money in different banks. Crowdfunding platforms who also have their money housed in different banks. And government programs. There are government programs and grants and things that you can get to help fund your businesses. It's also important for startups to carefully evaluate the risk and reward associated with each funding option before making a decision. To me, I think the best thing that you can do is obviously diversify your risk, right? You know, they have a reason, don't put all your eggs in one basket for a reason. They have the saying, don't put all your eggs in one basket for a reason. You trip and fall, you drop the basket, you break all your eggs, right? Additionally, startups should have contingency plans in place in case their primary source of funding is disrupted. This could include identifying alternative sources of funding or cutting costs to conserve cash. Startups should also maintain good relationships with their investors and financial institutions to ensure they have access to capital when they need it. So that means if you need to do a bank run because you want to try to get your money out before anybody else, you have a manager at the bank, a friend at the bank that can help fast track your withdrawals. I know for myself, my bank account's in Sierra Leone. I know the manager there. So if I need to take out cash, I can take out cash. And I do take out cash. The other idea here is to diversify into cryptocurrency as well. That's obviously a pretty volatile market. And I am not an investment advisor by any means, but that is another option. Of course, you can also run into the same issue where those cryptocurrencies devalue and lose value. And now the cash that you entered into it is no longer worth it. So if you try to sell that crypto to get cash back, then you may also have those issues. So, you know, there is no one true solution. There's no silver bullet. The best thing you can do is diversify your interests. All right. Now, that is all I have for the presentation. So let me remove that from the screen. So DR says best solution is start generating cash. There you go. Esther Oppong says, I guess we're going to have to start saving our money in some igloo. I mean, you're definitely going to have to find ways to save your cash for sure. As a business, if you're a startup and looking to get investments, you're going to have to find ways to ensure that you are not at risk of exposure by having all your money in one bank. All right, guys, that concludes the presentation. Any other questions, comments, concerns, thoughts on this topic or anything else pertaining to African tech startup ecosystem? More than happy to answer those questions if I can. If not, happy to do some research and answer those questions anyway, as a follow-up. I see a couple of new people joining. I will say for those of you who have just joined, you missed a very intense and very compact live. I went through a number of different things regarding this crisis with Silicon Valley Bank and how it has impacted African startups. So if you're interested in seeing anything about that, just go back and rewatch the replay of this live. This will be available on all platforms: Twitch, LinkedIn, Facebook, YouTube, Instagram, and Twitter. All right, so Esther Oppong says, thank you very, very much for your time. Great info. Thank you for joining. I'm glad you found it helpful. DR says, perhaps tech startups should start asking for their funds in gold. I mean, that's another thing that people can talk about too. You know, there are natural resources whose value increases over time. And so maybe buying gold is another option. Excuse me, Nadege says, thank you so much all for all the great info, of course. Jerry Campbell says, establishing asset manager companies and setting up your own PE funds is the way to go. So, so establishing asset manager companies and setting up your own private equity funds is the way to go. So basically what he's saying is pulling cash together outside of the banking system on your own is the best way to potentially minimize your exposure, right? Lenora says, when you're doing the live on Sunday, will you do your Monday live? Great question. Yes. So I always go live on Mondays, no matter what. The Sunday lives are for the Pepper Soup group. And I don't go live on LinkedIn on those topics. Those topics are really more around dating on the continent of Africa and how that looks for people from the diaspora living here. So we have a ton that we go over in those lives, and those lives are meant to be a collaboration with the ladies of Pepper Soup, which is Kenya and Masa. They have the brand Pepper Soup. That's really their brand, and I'm just coming along with them to kind of join forces to talk about these topics. Jerry Campbell says, very informative as always, Joe. Many thanks. Thank you for joining. I'm glad you found it useful. Stephen Mitchell. What's up, Stephen? It says, thanks, Joe. What's going on? Thank you for joining from LinkedIn. I love that we got people joining from all different platforms. We got Twitch, we got LinkedIn, we have Facebook. We've had people join from everywhere. So I do thank you all for joining. Anything else? Any other questions, comments, concerns, thoughts? I see people. Okay, here's something. So Leo, okay, what'd you say, Leo? They saved that bank because of, okay, this is stuff pertaining to the global sickness, and I do not want to get demonetized, so I can't read your comments, but basically, Leo has this belief system that the government saved the bank because the bank invested in certain things that came along with the global sickness. That is what Leo is implying. I, myself, Leo, cannot confirm or deny that because I don't know. I mean, I do know that they did invest, but I do not know if that's the reason. I don't think any of us really know if that's the reason. To me, it's probably because the tech ecosystem has a large part to do with why the United States considers himself still one of the top global powers because of the technology. As you guys might be familiar. So here's another thing, right? There are a lot of conspiracy theories coming into this. And there's a couple things that we have to look at just in terms of practicality, right? The United States does not make pretty much anything in the United States anymore, right? All the chips are manufactured in Asia. Clothes are manufactured and made in Taiwan, in Africa, and in other places, China as well. Our phones, everything is made everywhere. The cobalt comes from Africa, and specifically the Congo. However, one thing the United States is far and above every other country on the world is tech startups by far, in terms of the valuation, in terms of their use around the world, in terms of the cash they generate. And so if they all have money in one bank and that bank goes under and they don't have cash to pay their employees, then that's a big problem for the United States. And so of course the government has to step in. Now, there could be other reasons too. I'm not going to say that there aren't other reasons why they stepped in and bailed out that bank. But you absolutely have to bail out a bank like that if those companies are the reason why you're considered a world power, right? Okay. Lenora says, I have investment in gold. Diversify should include all aspects and include currency. Agreed. True, is it memo? Sorry, if I'm pronouncing your name wrong. First time here, listening behind the scenes. Thanks so much. Thank you for joining. I'm glad you found it helpful. A seeker says, thanks for sharing information with us. Of course, you're welcome. A seeker says, was Signature Bank failure due to crypto? That's a great question. So I saw Signature Bank and Republic Bank as two other additional banks that seem like they're dealing with the same issue. I don't know what those issues were. It seems as though they may have also been in business with Silicon Valley Bank or some of the, but I don't know, maybe they have some of the same asset classes. You know, they have some of the same bonds as well as Silicon Valley Bank. They were named in an article that I was reading, but it was just basically saying Republic Bank and Signature Bank are also impacted by this, but I didn't get much information beyond that. I saw that about 20 minutes before we went live. So apologies, I do not know specifics of what happened with Signature Bank, but if anybody else does, please feel free to share in the comments. So again, one thing that I've been seeing a lot of, because of the Authentic African Instagram page, I follow a lot of influencers in different sectors, and a lot of influencers are also conspiracy theorists, and many of them attribute a cause of something to an intent, right? Or the outcome of something, they attribute it to an intent without actually knowing the intent, right? So there are going to be many people who know more than me, who know more than all of us, right? Who can sound really smart and say some really smart things about, you know, the global group who control all these different things, right? And look, that doesn't mean that there isn't some truth to that. However, you can't attribute everything that happens to these groups, because we all don't really know, unless we're in the room with those people making those decisions. We all don't really know. All we can focus on is what's publicly available and easily found. And one thing we do know is what I mentioned before. These startups are the reason why America is seen, it's at least as in terms of businesses, it's seen as like the future of business, because all the tech startups, I mean, I use Uber here in Ghana. I've used Uber in Nigeria. I've used Uber in France, Germany, Spain, and the UK, right? And so, you know, obviously Uber started in 2012 in Silicon Valley, right? I use Airbnb. In fact, this apartment that I'm in right now will likely be put on Airbnb, started in Silicon Valley, right? So there are companies that are all around the world that people are very familiar with and that use, and it's because of people like Silicon Valley Bank and the ecosystem in Silicon Valley that makes the United States as strong as it is. And so you have to understand that, you know, if you have a potential for having a huge impact on those businesses, it's only right for the government to step in and bail out the bank to ensure that it doesn't have a really huge detrimental impact on the tech sector, the US tech sector to be exact. Okay, it looks like we answered all the questions today. We solved all the world's problems. But no, seriously, I want to thank you all for joining. This has been a great live. I appreciate you all adding your comments and your thoughts to help, you know, keep the conversation going. I will continue to share information like this every Monday. This is the more serious live where we interview folks. We talk about really serious topics about, you know, we talk about investing. We talk about the year of return and the revenue it generated. We talk to founders of companies, whether they're from the diaspora living here or are from here. We want to make sure that we're sharing the stories and sharing information that'll help you make decisions about coming to West Africa or Africa in general, or moving to West Africa and Africa in general. So I hope that you found this useful. Make sure you guys hit that thumbs up. Okay, make sure you hit that like button before you go. You have to hit the like button so that YouTube shares this with other people in their feeds. Make sure you hit that notification bell on the subscribe. So make sure you subscribe, hit the notification bell so you're notified every time a new video comes out. And of course, make sure you share this with anybody who's had any questions with what is going on. With that, Linora says, thank you again. She says, good night from Brooklyn. Good night to you all. Thanks for joining. I really appreciate it. And I will see you guys all on the next video.